Welcome back. Micron shares taking a dive on weak second quarter guidance, but what the drop might not reflect, signs of strength for the chip maker, especially in its AI-related business. Deirdre Bosa digs into the details for today's Tech Check. Hey, Dee.
Hey, good morning, Leslie. So the good news for AI bulls is that Micron's disappointing quarter was not related to its AI business. As Leslie just said, you saw a 46% jump in data center, which now makes up more than half of all sales. And the company said that AI and upgrades of traditional servers will grow server unit shipments more than expected this year. The downside, though, is that where it was weak, consumer-related chip markets like PCs and smartphones, that might signal that the AI upgrade device cycle is not gaining the kind of momentum investors were hoping for. And that could fit into this larger narrative of a digestion phase. The idea that after the initial rush to adopt AI technologies and infrastructure, companies and consumers are hitting a pause to digest them. Devices are increasingly part of the AI story because features are supposed to drive upgrades, progress in the models themselves, ChatGPT, Anthropic, Gemini. They drive use cases, but that's not happening the way that some had hoped, and that could hit the whole ecosystem. JPM cited a recent survey that highlighted lower momentum for the iPhone 16 cycle relative to the 15 on still lower awareness for Apple Intelligence. Those are its AI features. Now, that tracks with what we heard on Micron's earnings call last night. Its mobile business unit saw a 19% quarter-over-quarter decline. PCs not any better. Micron forecasting that market to grow just around 5% in 2025, most of that coming in the second half. Now, here's the takeaway. If AI device sales are not getting that AI boost, that could be further reason for the hyperscalers, Amazon, Microsoft, Google, to reconsider their own spending on chips and infrastructure. Why keep pushing for advancements in those large language models if the current ones aren't delivering substantial ROI? They start reporting quarterly results in late January, early February, and for sure the markets will be paying keen attention to their CapEx plans. Now, some of those worries about plateauing progress and underwhelming adoption, they have already been playing out in the markets, particularly for the chip makers. NVIDIA's forward price to earnings multiple, look, it's sitting around 30 today, 33. A month ago, though, it was higher, around 37 times forward earnings. AMD's has also fallen, while Broadcom is now the highest valued by that metric of the bunch, surpassing NVIDIA for the first time in a very long time. Its custom chips seen as winners in the next inference phase of Gen AI. Micron, so guys, basically it's another clue in how investors may be rebalancing their expectations based on the evolving dynamics of that AI life cycle, and that sort of reevaluating will hit everyone from the chip makers to the hyperscalers to the software companies developing on top of these models.